Hi,
Hi,
Karen.
hi, Brooke. This is so wonderful. Thank you so much for having me.
Thank you so much for coming. I really appreciate it. All right, so I need to do a couple of announcements. First of all, Karen, I want to introduce you, but before I even introduce you, let me say that Karen is an attorney. Nothing in this discussion implies a client-attorney relationship. Nothing should be construed as advice from an attorney. Just have I covered the non-attorney relationship here?
I love it. I was going to give a similar disclaimer, the fact that the law changes on a daily basis. And so today is June 16th, 2020. And it's very important to remember that things could change tomorrow.
Yep, tomorrow can be a whole new world.
They already changed on June 11th for New York State and estimated tax payments. So things change daily.
It does. All right, so let me introduce Karen Tennenbaum. She, as we established, is an attorney. She is also a CPA. So as you might imagine, her practice concentrates on tax issues, which is so awesome. She does federal, she does state, she does appeals, she does IRS, she does offers and compromise. If it is related to taxes, federal or New York State, Karen is your gal. And Karen, you're out on Long Island, but you do a whole bunch of different counties, don't you?
Well, we handle federal, so we're all across the country.
Okay. But you also do some New York State stuff, right?
Yes, we do. We handle IRS and New York State tax problems. So if you have a federal IRS problem or something specific to New York, and of course we do a lot of snowbirds that want to move to Florida that New York State claims that they're New York State residents.
Yes, and that's expensive.
Yeah, they go after deep pockets. And if you move, usually it's the year you sell your business, you have a tremendous gain, they want a piece of it. And now under sheltering at home, where were you sheltered? Where were you stuck? Were you stuck in Florida, October to May? Did you come to New York? Are you visiting relatives? So we're going to get into those issues, but it's been very interesting. People are calling. They wanted to move out before because the federal government put a cap on the state and local tax deduction anyway. So 2 years ago, everyone was like, oh, I'm moving out of New York. And now if you had an apartment in New York City or you lived somewhere else and you worked in New York City, you're thinking, do I still want to be in New York City? And so a lot of people are moving out of New York City, New York State, and we're getting calls on a regular basis on now planning issues.
Yeah, and I live in Texas. We are a no tax state. Go
That's
Texas.
Right.
We're kind of the wild west down here, and it's awesome. But we have a number of friends that have second homes, and they will literally sit down at the end of the year and plan out exactly when they will be in their other homes because they don't want to get stuck with New York taxes or other states. We have a friend who's got a house in London, and she sure doesn't want to get hit with inheritance tax in England. So yeah, I mean, planning that really is a thing. So
well, in New York State, they're going to tax you as a resident on all of your income, no matter where you earned it, if you're either domiciled here or you are a statutory resident. So a statutory resident requires minimal things: a permanent place of abode, which is living quarters maintained for more than 11 months, and more than 183 days in the state. And so you could easily get over that number very quickly, especially if you were required to stay home, and home is New York. It'll be interesting to see if there's any leniency or change of rules, but I doubt it. New York State's going to need the money. So it's going to be fun. It's going to be fun.
Yeah, New York State definitely needs the money. And for that matter, the federal government needs the money. It's so interesting. So we're here to talk about the coronavirus today and how it's going to impact your taxes. And one of the things they passed the CARES Act that was like gajillions of billions of dollars, which I have to say, really, we loved the PPP and the EIDL, and that is cheap money that we're probably never going to see again in our lifetimes. I don't know. We'll see what happens in a few months. But it's the government with this kind of economic impact can't raise taxes. So they can't get that money back. So the only way they're going to get it back is what's referred to as enforcement, which is going after the people that owe. Do you agree with that?
So this is so interesting. I always say that prior to this, the government did the marketing for me. So they would put pressure on taxpayers. We're going to take away your passport on the federal level if you owe $53,000 or more than $53,000.
I didn't know that they took your passport.
They take your passport. They say you're seriously delinquent, and if you owe more than $53,000, that's it. You better pay your taxes or come up with a collection alternative. In New York State, if you owe $10,000 or more, they take away your driver's license. They can take money out of your salary. They do a wage garnishment on the federal level. They call it an income execution on the state level. They can take money out of your bank account through a levy. They could put a lien on your property. So I've always said it's like they put a vice against your head. And they come to me on a regular basis saying, how can I relieve the pressure? And so that's what we do. We serve as a way we solve your tax problems. We negotiate with them. We get either better terms. We'll do an offer in compromise where you'll pay less. We'll do an installment agreement where you'll pay over time, and we'll get into some of those things. But so normally that's what we do. In fact, we have what we call the cheat sheet. It's the top 10, and we have a top 10 list of how it's been affected by COVID. So you could reach me at litaxattorney.com or email me at taxhelpline@litaxattorney.com. And we'll send you these lists. So what we have is every single thing that's in the toolbox for the IRS in New York State. All the horrible, terrible things they could do to you and all the great things you could do back to help. So if you want that cheat sheet, someone could email me. But now they've provided some temporary relief on the federal level. I have to say, New York State has not provided as much guidance.
All right, what have they provided on the federal side? Because I know that they moved everything to July 15th, from April 15th to July 15th. So
right. So the filing deadlines and the payment deadlines have been moved to July 15th. So there's not going to be interest or penalties if you pay by July 15th. But now what happens with other things like the audits and the collection issues? So if you want, we could get into any one of those things now.
Someone told me in the past couple of months that when the government shut down, there was at some point the government shut down and furloughed, and it was like 2 weeks, but it set the IRS back like 3 to 5 months. So here's my question for you. If the IRS has been basically shut down for, let's be generous and say only 2 months, how are they going to deal with the backlog? How are they going to deal with all of these? I mean, they're behind. They don't have all the April 15th tax returns, and those haven't been processed. And now that's going to process in July. And we've had quarterly payments that people haven't made that they're going to need to make. Plus, you've got people who were in the middle of, gosh only knows what, you know, trying to get stuff negotiated and all of that. They were in the middle of enforcement actions, and those have been put on hold. How are they going to deal with all of this? And does this mean that the risk of being audited is going to go down, in your opinion?
So that is, first of all, what you've just described is really the issue. There's going to be such a tremendous backlog. We heard that because they closed all the service centers, that they had truckloads of mail that had not been delivered. And if you wanted to start a new matter with a power of attorney, they wouldn't even accept the faxes. So,
oh yeah, I talked to someone who was talking to somebody at the IRS, and they needed to fax something in. They had gotten a live person, and the person said, they have shut down all the fax machines on our floor except for one. And you had to get in, and the number was busy all the time because it was people were constantly trying to send stuff in.
They specifically sent out a memo and asked for you not to send anything in anymore. They did. But I have to say, so they closed at one point the practitioner priority hotline. If you were dealing with a revenue officer or a revenue agent on an audit or a collection matter, you were able to continually deal with them. They worked remotely. You could get to your local taxpayer advocate. They had phone numbers to contact them. So that was good. But they also sent out a memo that said, let's work on the matters that we have now. Let's not start certain new matters. If you were a high net worth non-filer, they were still going to continue to come after you. But otherwise, they weren't going to start new audits. They weren't going to start new liens. They weren't going to start new levies. They weren't going to say you were seriously delinquent and certify your passport as a problem. They weren't going to start new trust fund recovery penalties, which usually relates to withholding payroll taxes that flow through to you personally. They were not going to send things to the private collection agencies. They were not going to seize your houses. They were very nice. They sent out a memo even that said, if we're involved in an audit or a collection matter, we want everyone that works for the IRS to be sensitive to everyone's circumstances and come up with the appropriate resolution, which was very nice.
That is nice. Okay. So does this mean, because they're so backed up, and let's say it takes them, I'm going to make this up, I'm pulling a number out of thin air, right? So let's say it takes them 6 months to get caught up on just the everyday stuff. Does that mean that basically there's 9 months where they're not going to start anything new?
I don't know about that. We're already starting to get notices of new things. So I think
they're back at work.
Certain things, right? They're back, and the certain things are generated automatically, and they don't want the statute of limitations to expire. They have to protect themselves. So they're asking for waivers, extension waivers, and if you don't sign them, they're sending out notices of deficiencies. So you have to, yes, there'll be a tremendous backlog, but that doesn't mean they're out of business.
All right, so you say there's certain things that are generated automatically. There's certain matters that automatically get opened and sent out and no one's triggered them in any way. And what are those things?
Right, well, that's a good question, and I don't know that I'll be able to answer that specifically. Again, they originally said we're not starting any of these new collection things that I listed earlier. They also had a memo that listed the things that they will do. I don't have that in front of me right now, but it's public. Anyone could Google it. So there is a memo out there that specifies what you're asking.
Do you remember what any of those things are?
Well, as I said, they're going after the high net worth non-filers specifically. That for sure. And I've seen articles about that because everyone is like, oh, okay, everyone's being lackadaisical. I'll jump on that bandwagon too. But no, they're going to come after you. But let's talk about what happens if there was already a backlog for offers in compromise. I mean, it still takes a year to deal with the bureaucracy. So what's going to happen now? If there were pending offers, they've actually given you the similar July 15th deadline. If they've asked for additional information, you don't have to give it until then. If you had to make a payment, you don't have to make it until then. Interest will continue to accrue on accepted offers, but they're not going to default it. And if you had to file a tax return, they want you to file it by July 15th, if you had an old tax return that wasn't filed.
Let me ask a question, because that was an interesting thing you said. You said that if you had a payment due, you don't have to pay till July 15th.
On an offer in compromise. On an offer in compromise. They're not going to close it without the taxpayer's consent at this point, right?
Okay, so let's say that's you basically had a 3-month abatement where you didn't have to pay, right?
Yeah.
All right. If you were supposed to be making a payment every month of those 3 months, what's going to happen after July 15th? Are they going to say, okay, it's after July 15th, we need this month's payment plus the 3 back payments all in one payment? Are they going to extend? What's going to happen?
Okay, so you're talking about installment agreements. So let's talk about that for a moment. So they suspended those payments as well. However, if you had a direct debit, meaning they automatically take the money out of your bank account, you actually have to call. They didn't automatically stop those. You'd have to call your bank, stop them through your bank, and then call your bank again before July 15th so they would resume the payments. So installment agreements that already existed will continue to go on after July 15th. You had your deferral.
Yeah. Okay. So one of the things that's so interesting about this, so the CARES Act created some new lending facilities, and really what it did is it modified some existing lending facilities. And one of them was the EIDL loan, the economic injury disaster loan. So I don't know if you have read the paperwork for the EIDL, but one of the things is, if you get behind on any tax, whether it's payroll tax, ad valorem tax, personal income tax, business income tax, if you get behind, you've defaulted on your loan.
I heard that. I think I heard it from you actually.
Yeah, I've been screaming about it for about 6 weeks now. Not very many people are listening to me. Actually, that's not true. CNBC really did listen to me about it, and wrote a great article. But so if there is someone who is in default, or if there is someone who has past due taxes, and the SBA hasn't figured it out yet, how do they fix it
Brooke, this is
before
a
the
great
SBA figures it out?
Right. This is really a great time and a great opportunity to have settlements. So if you want an installment agreement or an offer in compromise, now's the time. Unfortunately, while they were closed, it was hard to start something new. But if you already have a connection with somebody, or now they're opening up again, or if you want to deal with the taxpayer advocate, now's a great time to get your paperwork together, do all the planning, and come forward to us or to another representative to put an offer in or an installment agreement in. So let me explain the difference.
Wait, can I ask a quick question?
Sure.
So are they trying to get those things processed really quickly? So maybe they're going to be generous, and the IRS has told their employees to be, what did you say, sensitive to people's situations?
Right. So we're seeing a lot of great deals. So people who are anyone who was working on a matter is trying to close up all the old matters because they had no new matters and they were working remotely. So to the extent they took the file home and we were able to work on those files, they're trying to clean them all up. So we have 150 matters that we're working on at any one time, and we're trying to close all of them, all the old ones up. So the question is, though, now what happens with the new ones? As I said, this is really a great opportunity. I think that the states, the federal government and the state will give you a deal. You have great excuses. I didn't have income. My business was closed. I had no opportunity to make a living. So this is my financial situation. Give me a deal.
Karen, the IRS is on sale.
Right. Let me explain the difference. And so an installment agreement means you'll be able to pay the full amount plus interest over time. And an offer in compromise is, no matter what I do, I'm never going to be able to pay that full amount. Let's make a deal. And let's make a deal based on financial statements, your ability to pay. Doubt as to collectability. There's also doubt as to liability. It's not really your liability. And there are other things that have changed as well, economic hardship. But really, it's doubt as to collectability. If they collected against you, how much would they be able to take? If they took, so it's the net, it's income minus certain expenses, plus the net equity in your assets. But they don't take the full value on every asset. So they'll take like 80% quick sale value of your house. But you have to go through a whole list, and they have certain expenses, and it's different for every area of the country. So Long Island might be different in Nassau County and Suffolk County. Texas would be totally different. So what they say is a standard is based on locality, and who knows, you might be paying more. And we had a very interesting situation where somebody, the IRS said, I'm sorry, we're not going to accept this offer in compromise. Your house is too big, your school is too expensive, your food is too expensive, your clothes are too expensive. And we said, we shouldn't be going by the basic standards. We have someone who follows certain religious requirements, and they have to go to that school, wear those clothes, eat that food. And they gave us an allowance. And we were able to get a very reasonable number. So it's important to know the standards, but also to know the rules.
Karen, are you really telling me that you argued that their religion says they have to have a bigger house?
Well, not a bigger house. They had to have the house within the Eru walking distance to the temple. So it's not bigger. Okay. But it was based on location. It had nothing to do with the size. It had to do with the location to their temple. Yes.
Wow.
Yes, they were strictly observant. Yep. Yeah.
I guess it helps to really know the ins and outs of the law, because you can find things that will make a difference.
So unfortunately, New York State did not provide as much guidance or as much flexibility or leeway as the federal government. So they did delay the filing and the payment of the tax return to July 15th. And the second, and the first, what they called the first quarter estimate. But what happened to the June 15th estimate from yesterday? On June 11th, 4 days before, when no accountant had anybody's information because they waited until July 15th, New York State came out with a notice that said, by the way, the estimate that's due June 15th is still due June 15th. So how do you estimate how much you owe if the accountant, you didn't give your accountant all the information yet, or maybe you didn't even get back to your office to get the information yet? Yeah. So that's, and there are still a few unanswered questions. It's not 100% clear how to apply it. What happens if you had an overpayment or an extension? So that'll be interesting.
Yeah.
But they also, yeah, I was going to also say they gave a little leeway on the sales tax, but it doesn't apply to everybody. It didn't apply to monthly filers. It didn't apply to prompt tax filers. And it's on a case-by-case basis that if you couldn't file your tax return that was due March 20th, first they gave you one date, and now they extended it to June 22nd. But you don't automatically get penalties and interest abated. You have to do it.
Yeah,
there's a link. There's a link. You have to request it, or you wait for them to assert and assess the penalties, and then you could do a penalty abatement request. So it's not as easy and not as whatever.
Well, I mean, we laugh all the time. Our whole team laughs constantly because, Treasury and the SBA keeps putting out these interim final rules, which is a total oxymoron. And we're like, more interim final rules, which they really like to send out on Friday afternoons. So it sounds like New York State is following in the footsteps of like, this is final, but it's only interim final, so we don't really know.
Well, initially, Governor Cuomo said, "Oh, we're going to follow the federal rules," but he said it at a press conference, and it's not law until it's an executive order. So there was about a week plus where no one knew what the rule was. Do we go by what he said, or do we wait for the rule to be in writing? But now it all came out.
It all came out, yeah, and we saw that with the federal government too. I was sitting. Trump, when they were doing the daily briefings, got up and said the interest rate's going to be 0.5%. They're going to fund the PPPs within 7 days. I'm on the phone with my banker who was on the 12-person PPP task force.
Wow.
Like, are you here? Like, is this all true? She's like, what are you talking about? I don't even know what you're talking about. I'm like, oh yeah, you missed it. Trump just changed everything. And then, the SBA Treasury came out and said, well, it's not going to be this, it's going to be that. So yeah, you do always have to kind of wait. All right, can we talk about payroll taxes for a few minutes?
That's not really my topic. That's probably not the best topic.
You don't love payroll taxes. All right.
The only thing I can tell you is that if you don't pay them, they flow through to you personally, just like New York State sales taxes. Mm-hmm. And in New York State, it's not dischargeable in bankruptcy or death. So once it's yours, it's yours. And we have had so many cases where they come after the responsible person. And we represent a lot of restaurants in either sales tax audits or these kinds of audits. And what we find is if the father sometimes has a bad track record, he'll use the name of his child. Sometimes it's the exact same name. And so we represented somebody who owned a restaurant. His son was in law school. You talked about you can't have the EIDL loan if you have outstanding tax. It's hard to get past the character and fitness committee if you owe a lot of tax. And
oh my gosh.
The son, who's named Junior, didn't even know that his father was using his name. The sales tax and the payroll tax flowed through to him personally. And we had to go in front of New York State and say to him, we have to settle this matter because you can't have this outstanding tax. And we said to New York State, the son didn't even know that his father was using his name. It's a different signature. And unfortunately, the father was pyramiding debt and, opening a business, closing the business, opening the next one, closing the next one. And eventually we proved to New York State that it was not this son's liability. It wasn't his name. It wasn't his name, even though the father wrote in Junior. It was really the father and the father's signature. And the father was running the business, and the son was in law school full time. He wasn't even there. And so you run into these situations on a regular basis where you might be held personally liable, and you didn't even know that the liability existed. And what we see a lot is people like to invest in restaurants. They think, oh, it's so cool. A celebrity in California thought a New York restaurant was very cool. Let's invest. They don't realize that if you have certain entities like a limited liability company, LLCs, you think it's limited liability by the name. But guess what? In New York, it's per se liability for sales tax purposes. So they changed the policy at one point, and now they changed the rule. But if you were a 50% or less owner, Now they give you the opportunity to come in and prove that you're not liable for the whole thing, but you still might owe your pro rata share. Before this, the rule was you owe the whole thing. You owe 100%. You might be a 1% shareholder in a restaurant that you only visited on opening night and never came back, but you didn't follow what was going on with the finances, and they owe a lot of sales tax, and sales tax flows through to you personally on the whole thing until the policy changed and now the law changed. But you still owe money.
Yeah.
Can you imagine?
Yeah, that would be awful. All right, let's go back to coronavirus, because I live and breathe coronavirus. This is all I do. All day, every day, coronavirus in your money. All right, so this is.
Let's go back to residency issues. Because residency issues, I think, are the real. Oh, go ahead.
Hold on.
Go ahead.
I want to have a discussion about, and this is going to be an opinion, Karen.
Okay.
Fully opinion, because the Treasury has said something, the CARES Act says something, so I just want to get your opinion. So normally when you get a loan and it gets forgiven, you get a 1099, which you have to add and count as income, right? When they wrote the CARES Act, they said the PPP loan is going to get forgiven, but you can't issue the 1099 as income. This is going to be basically free money, right?
Right. The grants.
Everybody runs out, panicked, gets the PPP money. It runs out in the first round. It gets a second round. The banks finally get things moving. There is still money available, I do believe. So go through, do all that. That's all great. And then Treasury came out. Was it Treasury or the IRS? That said, well, we have this rule about double dipping. And if you don't take it as income, you cannot take the associated expenses, right?
Right. Yeah.
So that's where we are right now. Do you think that that's going to hold? Do you think that, because it's essentially it's the same thing. If you got a $50,000 loan, you can't take the associated $50,000 in expense, which means your net income is going to be $50,000 higher than your P&L says it is, which is the same as being able to take the expense and getting the 1099 for $50,000. I mean, we're just running around in a hamster wheel. So what do you think is going to happen? Do you think that Congress is going to change? Do you think that Treasury is going to relent? What do you think is going to happen?
So I've been on many discussion groups where this has been the topic. I think the accountants were originally surprised that you couldn't take the deduction. I think
remember one member of my team who was so funny. She's like, no, guys, no, don't get so excited about that. No, I don't think it's going to work that way. We're like, but the law says. She's like, yeah.
Right. Wasn't it somebody who was on the committee already came forward and said that was not the original intent? Right?
Really?
Yes. That happened the next day. So they came out and said it's not going to be income, but it's not going to be a deduction. And the next day somebody said, well, I don't think that was what was intended, but I don't think that's gone anywhere. So I don't think that's changing at the moment.
I don't think it has gone anywhere either, which is interesting because now as they've changed the PPP, you now have 8 weeks or 24 weeks to use the money. And as we're talking to companies and what's the best thing for them to do, because that really is on a case-by-case basis. And I'm like, now hold on. You need to take 20 to 30% of that money and make sure, not actually the PPP money, we need to spend the PPP money on payroll, but you need to have a savings account with 20 to 30% of that because you're going to get taxed on it. And people are like, what? I mean, they're like, just flabbergasted.
Wait, I have a question for you because you're so involved in the PPP.
Yeah.
Do you think there's going to be another round of PPP, even though there's money already set aside? Do you think because a lot of businesses were still out of business, that they're going to give you more money? I think I heard something rumor that if you have under 100 employees and you already spent your first round of money, that they may come out and say, take another 2.5 months worth of money. Do you think that's going to happen?
Personally, I don't think it's going to happen in the next couple of weeks. I do think as we're watching virus rates increase, as states have opened up, as the number of people who have coronavirus is rising. So Texas is a great example. Wild, wild west down here, we opened it up, baby. And coronavirus is rising. Now, part of that is attributed to the fact that we actually have tests now. So part of it's just an increase in testing. But they're really watching a hospital intake. And if we have to close down again, if there's another wave of coronavirus and we have to start, I don't know that we're ever going to shelter in place the same way we did the first time. I don't think lawmakers have the stomach to shut down the economy like that. But I do think there will continue to be restrictions. And I think that they could be tighter. If we go through a second wave, I would not be at all surprised if they did more PPP money.
So we have seen so many people now working from home and telecommuting, and that raises other tax issues. So what happens if you historically lived, let's say, in New Jersey or Connecticut, and you had a New York City employer, and you came into the office on a regular basis, and let's say you had an apartment in New York City. Now what happens when now you have to work at home? So it impacts statutory residency issues and allocation of income issues. Which state is going to tax you? Are you going to get a credit for earned income? So in New York they have the work at home convenience versus necessity rule. Are you working at home for your convenience or the employer's necessity? And what's going to happen if you can't get a credit? Are you going to be double taxed? And what happens on your intangible income? So there's domicile rules that are impacted. There's statutory residency rules that are impacted.
I have a great way to solve all of this.
Well, let's hear.
Move to Texas, California, Arizona, maybe. What are the non-tax states?
And Florida.
Yeah.
Maybe one of the Dakotas, South Dakota. Well, let me just say this. So we handle a lot of residency issues, and it's not as simple as you think to just say move, because even if you move to one of those states, you have the burden of proof if you moved out of New York. New York, I think, does 3,000 audits a year. And whenever I do a seminar on this topic, I start by saying, raise your hand if you think you know where you live. And 100 people raise their hand. And then an hour later, I say, now that you know the complex rules, raise your hand if you think you know where you live. And half the people are a little confused, not because I gave a confusing speech, but just because the rules are so confusing. So New York State, first of all, it's a very tough burden to have. New York State only has the burden if you were out of the state and moved back in. So like years ago, Derek Jeter was a Floridian. He was a Florida domiciliary, but he had a $20 million apartment in Trump Tower and lots of endorsements, and New York State wanted to tax him. But New York State had the burden in that situation. And the second it became a public situation and there were headlines, they settled immediately and no one really knows what happened. But in that case, and that's rare, New York had the burden. Usually you claim you're moving out, and then you have the burden of proof by clear and convincing evidence that you're not here anymore. And they look at primary factors: your house, the time spent, your items near and dear, your business activities, and the time where your family connections are. But you know what? What happens in the middle of a pandemic where you always wanted to move out? You have a vacation home somewhere else, and you go to it. You know, are you going to come back? Is it a temporary situation? Are you going to be there permanently? New York State usually does an audit over 3 years, so they'll have hindsight. It's not just what you did in 2020. What did you do after that? And usually you need some kind of triggering event, so at least you have some excuse why you moved. Usually
that's a really good excuse to get out of New York City.
Exactly. Everyone's moving out of New York City. So those are the domicile rules, but the statutory residency rules, you have a permanent place of abode and a day count. And what happens if you were stuck here? There are only a few exceptions. Medical, like if you were an inpatient in a hospital, or you were just traveling through New York. Otherwise, a second in New York counts. If you came in to go food shopping or now there's no shows, but if you came into New York for any other reason, that counts as a day. So a lot of people don't realize that. Now, what happens if you hit the 183 days because you were sheltering here? And now it's halfway through the year. You're already halfway through the year. You're stuck here. Is there going to be any leniency? And then, of course, these allocation of income issues when you're working at home. So normally the day that you come to the New York City office counts as a day in New York. If you worked at home just to, let's say you're a professor at a school, a college in New York, and you work at home to grade your papers, the days at home count as a New York day, even though you might be in Connecticut. There's the famous case Zelinsky. He was a professor at a law school, and it didn't matter that he graded his papers at home. They counted it as New York days. There's also a famous case, Huckabee. He moved out, and I think he came back to New York like once or twice, a few times, and that counted enough to allocate all of his income to New York. So,
wow.
So you think you're home, but it's going to be very interesting to see how the accountants handle this situation and how they allocate to New York source income.
Yeah, well, and you have to hope that both state and federal government, and we've seen, you've said that the federal government's trying to be sensitive. We can just hope that state governments are also sensitive to these kinds of things. Do you think that this is going to cause a lot of people to relocate?
Well, they're definitely all calling about relocating. I definitely see that. I mean, there's so many articles in the Wall Street Journal, the New York Times, people are moving out. And my kids alone, their leases are up in New York City. One is looking for a house, and what she tells me is that every time she looks at the house, there are 10 other bidders at or above asking price, and the house is sold within a day. And we're seeing that in New Jersey, Connecticut, and Long Island. So they're trying to get out of the city mostly. So that's interesting. But what you're going to see is if people didn't have a job, their businesses were closed, there's going to be a tremendous surge in tax problems, just generally. So whether it's the federal government or the state government, you're going to see everyone has to go and find an alternative. We have a free app that might be helpful. Rather than trying to navigate the IRS and New York State websites on your own, download Tax Helpline. It's a free app. It gives you links to the IRS in New York State. It gives you a specific COVID-19 link and resource, but it also gives you other things that I think are helpful. So in New York State, if you didn't file and you've been a non-filer all these years, you could do a voluntary disclosure. You could say to New York State, oops, I made a mistake, and they're going to abate the penalty immediately. They're not going to go after you criminally. And if you need some terms to pay, they'll work on that as well after they accept your voluntary disclosure. So we have a direct link.
Is the federal government doing a voluntary disclosure also?
I have not seen anything like that, no.
Okay. No. All right. You said something in there, and I wanted to go back to it.
Sure.
And now I've totally forgotten what it was. Oh my gosh. I don't know.
So meanwhile, I think really it's an opportunity for everyone to get their documentation together, because there is going to be, after July 15th, how are you going to pay? If you didn't have a job, it doesn't matter that you got a deferral. On July 16th, you have a problem if you didn't pay on July 15th. So I think now's the time to, on your own, again, this do-it-yourself tax helpline is an app. You could do an installment agreement with the federal government or New York State, given certain limits. You could do an offer and compromise for the first time on New York State online if you're an individual and you owe $10,000 or less. You could do an installment agreement, I think, for $20,000 or less with New York State, $50,000 or less with the IRS that you could do online. You could go online and see if you qualify for an offer and compromise. All of these links are on my app. So for free, we're trying to be a resource to the community. Download Tax Helpline and use it.
That's awesome. So, but I think your point is really, really good. The IRS is on sale. Like, this is the time.
I don't know. I don't know that it's on sale. I think that might be an extreme. I think it's an opportunity to come up with a reasonable settlement.
Is it discounted a little?
Right. Maybe it's discounted a little. I would say if you owe money, and I don't remember the statistics, but a very high percentage of people owe a lot of money, I have to say. So now really is the time to say, will I ever be able to pay it? Can I do an offer and compromise? Do I qualify? Or will I have to pay it back over time with interest and penalties and do the calculation? And you could always call us for a free, if you download my app, I'll give you a free 15-minute consultation. And you could always call us at 631-465-5000. Say you saw me on Brooke Lively's show. I'll give you we'll walk you through it. You can do it yourself, but if you need help, we're here to help you. We're always here as a resource. You know, I have to say I get calls on a regular basis from both taxpayers and accountants who question, you know, maybe they've handled the matter on their own. They got to a point where they can't resolve it on their own anymore. And so we take it over, and we always get, you know, pretty good results, better than when they started. If they start out with a bill already, the bill is always lower when we're done.
That's awesome. All right. So Karen, we said we were going to do this for half an hour. It's been 45 minutes.
Oh my God.
I know. Well, talking to you, time always goes fast. So
you're wonderful. You have been a tremendous resource to the community. I have to say, I have tuned into your Facebook Live on a number of occasions, and every one of them have been wonderful. So I'm honored to be part of this great group. So really, thank you.
You know, we made a commitment at the beginning of this that, you know, we have a lot of information. We have a very specific skill set, so that we were going to share that. So that's what this is. So Karen, thank you so much. I really appreciate you being on, and thanks.
Great. So everyone go to litaxattorney.com, and you were a great interviewer. I loved all your questions. They were right on point.
Thank you. Bye-bye.
Thank you. Take care.